Good evening, and welcome to the special presentation for February 28th, 2020. My name is Glenn Tompkins, Senior Instructor here at VectorVest, and it's my pleasure to give your presentation this evening entitled, Nailing the Turning Point, the VectorVest Advantage. So first off, let's talk about what's going on in the market right now. The coronavirus is the big news in the market, and it's driving the market down precipitously. So, the market has fallen now into correction territory. Normally, news-driven markets many times are emotionally driven, but these times, or the times with the coronavirus in play right now, is definitely affecting economies around the globe. But the first advantage is that we as VectorVest warned our subscribers of what was happening before it happened. Let's get into the software. As I look at the homepage of the software as of right now, the market fell off the earth again. Now, I'm not the bringer of doom and gloom. I'm just telling you the facts. The market has fallen, as I mentioned, into correction territory. Our market timing gauge is smack dab all the way in red, and the color guard is full of red. Let's start off by looking at a market timing graph. Let's start there. We'll go to the graphs tab. We'll change from a stock graph to a market timing graph, and we're going to put ourselves on a 1-year graph. I'm going to take off a couple of things. First off, the market was in a nice long in the tooth upturn, hitting new highs. I drew a trend line connecting the lows up to the high. Now, where did VectorVest come in to start to warn you? I'm now going to put on the MTI, or the underlying trend of the market. Let's put that on, and there we go. This indicator is cast on a scale between 0 and 2. It looks at 3 things: the price of the VectorVest composite, the buy to sell ratio, and the RT to give you the underlying trend of the market. We can use this indicator in a couple of ways. One, when the market is at a top, getting toppy, the MTI will get to a level of about 1.5. That is another good heads-up indicator prior to a market falling. Now, that didn't happen here because the MTI wasn't at the level of 1.5. But what else did happen? As the market was moving higher, the MTI was trending lower. This is known as a bearish divergence. This should not be the first time you're hearing about this. We talked about it in the Daily Color Guard report last week. Steve Chappell, one of my colleagues here in the education department, talked about it in the views last week as a bearish divergence. Why is that so important? Well, let's zoom in a little bit. As the market was moving up, the underlying trend of the market, or the MTI, was moving down. Look at that. The trend that I drew connecting the lows was broken. Let's talk about what the VectorVest software was talking about at this time. After we hit the high, we had a little candlestick pattern, possibly known as a hanging man, which we had follow through as well. Let's go look at this date of this candlestick pattern right here on 2/20. Let's go to the views. We'll go to the views tab at the top. Let's go back to February 20th, which was last Thursday. As we look, let's go down. We can see that concerns surrounding the impact of the coronavirus on the global economy intensified today, and Wall Street finished in negative territory with 3 yellow lights in an up-up situation. And every night, as another advantage of the VectorVest software, we give you guidance. Prudent investors may buy stocks long only if the market is rising. Notice that as we go down, we gave you the 1 and the 5-day Derby winners as well. All right, let's go up one more day. The next day after that candlestick pattern, we had confirmation of a down move. Let's go back to, or go up to, 2/21, which was last Friday. As we go through, let's scroll down to the strategy section. What did we give as guidance on the 21st? Prudent investors should not buy stocks at this time. Number 2, with the 1 and the 5-day Derby winners, notice that the top 2 one-day winners were worst performing contras and buying contra ETFs. Normally, when you see them migrate to the top of the one-day list, that is telling you that the market is giving more of a bearish tone. We have one other thing that went on. As we scroll up, and again, only something you find in the VectorVest software, we got a primary wave down on 221. As we look at this 3-week view of the color guard, notice that the last primary wave down wasn't until the beginning of the month. After that, we had up, 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 confirmed up, 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 finally a down. Another bell or warning sign to let you know it wasn't still the time to buy stocks. And what do you do at that point? If you're still long in the market, what do? You tighten stops. What else can you do? Pull stocks off the table or place some kind of defensive measure with options during this time. So here's the candlestick pattern. Here's where we got the follow through the next day. And guess what? Then we gap down, and then the big move on the market started to kick into place. All right, so those were the warning signs. Let's go back to my slides real quick so I can accentuate those. 1, the bearish divergence between the VectorVest composite price and the MTI. 2, the primary wave went down on 221. 3, the view said prudent investors should not buy stocks at this time. 4, the one-day Derby winners were country ETFs. And folks, the uptrend was broken, connecting the lows on the VectorVest composite on 221. So folks, the advantage of being a VectorVest subscriber is to get this information that you won't find anywhere else. All right, so with that being said, where are we now? Let's go back to the graphs. Well, we have 2 indicators as an advantage to help you as well. We have the MTI and we have the buy to sell ratio, 2 indicators that will help you to denote when the market is looking for a bottom. As the market has fallen as hard as it has, including going into today's close, could today be the bottom? Could that wick at the bottom be showing us some bullish buying pressure coming into Monday's activity? We don't know, and I won't prognosticate as to if we have hit a bottom. Could we still have more downside? We possibly can, but let's look at what we have at hand. The MTI. Once the MTI gets to a level of 0.60, the market is starting to look for a bottom. This indicator looks at the price of the VectorVest composite, the buy to sell ratio, and RT tied up into one indicator. When it gets below the value of 0.60, the market is looking for a bottom. This indicator is cast on a scale between 0 and 2. The buy to sell ratio is not cast on a scale between 0 and 2, but it does look at the overall health of the market, the difference between the number of buys in the system compared to the number of sells in the system. When the buy to sell ratio hits a level of 0.20, the market is looking for a bottom. Now, I want you to keep these values in mind because right now we have something called the rubber band effect. The lower the market goes below those values of 0.60 and 0.20, the proverbial rubber band is now being pulled lower. You know what that does? This sets up an incredible buying opportunity when the time is right. So now, what do you need to do? You need to learn to nail the potential turning point. So what I want to do is I want to take you back in time when these indicators were at the levels or lower than where they are right now and what happened and what to look for during those times. I'm going to put myself on a 5-year graph, and I'm doing this for a reason. As we go back to a 5-year graph, our graph now turns to a weekly graph, which means that every candle now represents 1 week. I want to show you the perception of what's really going on. Look at this value. Look at this bar for the last week. That is a humongous bar. And look at that compared over the last 5 years compared to all of the other red bars. This bar by far will dwarf any of these other red bars. Let's now put this on a 10-year graph. Same scenario. This is big news affecting our market in a big way. And last but not least, I'm going to put all of the data on the screen. And even back in 2008, let me zoom in here. Notice that we had several bars that made up one big bar, if you want to look at it that way. But if you look at it on a weekly basis, this is a big red bar. All right, now I'm going to put this back onto a 1-year graph. I'm going to put us onto an end of day 1-year graph, and let's go back in time. Let's go back in time. We're going to go back to 12/24 of 2018. You're going to see why I'm doing that in a second. 12/24, there we go, another bottom. Notice that the MTI and buy to sell ratios will get to those levels near market bottoms. So 12/28 of 12/24 of 2018, MTI at a level of 0.36, buy to sell ratio at a value of 0.04. Man, same kind of scenario we're in, but notice this retracement down to a bottom. It took a lot more time to get there than what is taking place right now. What do you look for during these opportunities when the market is looking for a bottom? Well, if you're a quicker, more aggressive trader, look for an explosive day. Let's zoom in. When did that happen? That happened on 12/26/2018. That is one way to get in. Big explosive day, great opportunity for the gunslingers to get into the market. Well, maybe you don't want to be that aggressive. Well, let's use the market timing signals that VectorVest incorporates. Let's start with the primary wave. When did that hit? That hit 3 days off the bottom. Was that a good opportunity to take advantage of this move off the bottom? Darn right it was. Look at that. Well, if you needed more confirmation, let's go to the green light buyer where you get a green light in the color guard pricing column. A few more days off of the bottom, but was that a great opportunity to make money in the market? It absolutely was. So utilizing the market timing that nobody else has in this industry is another advantage to helping you to hone in on a turning point. So I'm going to do one other thing. This was the explosive day that we had coming off of that bottom. I'm going to go to the Unisearch tool. Let's go to Unisearch. I'm going to go back to 12/26 of 2018. I'm going to show you how quickly you can do that. Click here on the date. Let's click it again, and it will give me a lot of different dates to choose from. Let's go straight to 2018. Let's go to December, and we're going to go to the 26th. That was the explosive day coming off of that bottom. We'll click on OK, and let's go start and look and see some bottom fishing searches. How do you get to them? Go to searches, bottom fishing. Now I'm going to choose a bottom fishing search. Let's start off with something that's a little bit lower dollar. Let's go with the Russell 2000. So I'm going to double click it as of that explosive day. Russell 2000, double click it, it will run it. Here's the stocks information of what it's looking for, and I'm going to quick test the top 10 stocks. So we're going to go to quick test, top 10, and normally from a bottom fishing scenario, you probably want to look at bottom fishing or testing over a 1 to 2 week time period, because after the bottom fishing occurs, we now go into a trending market. So there's different types of markets. We have rising markets, topping markets, falling markets, bottoming markets. So know where you are and know how long you should hold this search. Now, Russell 2000, lower dollar stocks, and I'm going to do a test from 12/16, and we're going to go 2 weeks out from there. Notice that it's taking me all the way up until right now. Bottom fishing from 12/26/2018. This search is still rocking and rolling. Let's go click on the calendar. As I bring up the calendar, I can now change my end date. Let's go back to 2018. Let's go to December. Now, the 26th was the day that we started. Let's go 2 weeks more, which will take me up to January 9th. From this, I'm going to click on OK. And now it's set my time frame from 12/26/2018 to 1/9 of 2019, a 2-week test. Let's run the test. Holy smokes, we're up 43% in 2 weeks bottom fishing, where the VectorVest composite is only up 5.68%. Boy, did we blow the market out of the water. All right, that's just one test. Let's go back and get into the software once again. Let's go back in time. Let's go to the graphs. So that was one opportunity when the MTI and buy to sell ratio were at really low lows. Let's take that off. Let's go back a little bit more. We're going back in time. Let's go to 2016. We're going to go to 1/21 of 2016. Notice where the MTI is below that level of 0.60. I want to find a good low level, 1.21. 121, look at that. MTI, 0.42. The buy to sell ratio, 0.005. That's way low. Now notice here, All right, coming off, was that a bottom? Well, you know something? It actually was not, but you didn't know that right then and there. So 121 is the level of the buy to sell ratio and MTI meet the criteria. We had an explosive day, but notice what happened. We had an explosive day, no confirmation. An up day, no confirmation. A couple of up days, a gap down, we pulled down, and guess what? We hit another level of a low. Hold, but wait 1 second. Just like I showed you the bearish divergence with the MTI, I'm going to show you something else. Notice how the market is falling right here. What's the MTI doing? Coming into that low, the MTI is rising. Now I'm showing you a bullish divergence going on with the market. So just as well as it helps you for the upside, it can get you prepared for the downside as well. So if I click right here on 211, what is the date that I want to use? 211 was the actual bottom. What was the explosive day? 212, and we had an opportunity to make some money. Now, again, that's the gunslinger day, the more aggressive type. If I want to go look at, if I want more confirmation, put on the primary wave. When did that happen? 1 day later. Did you have an opportunity? Yes, you did. Let's go to the green light buyer again. Did you have an opportunity? Yes, you did. So no matter how aggressive you want to be coming off of a bottom, the first thing you look for, folks, is an explosive day. If you are that aggressive, go that day. If you need more confirmation, let the VectorVest software lead you by way of market timing to get in at the right time. So I'm going to go to 212. Let's go to the Unisearch tool. Let's go back to 212. That was the explosive day. Go back to 212 of 2016. So let's go to 2016, February 12th. Click on OK. I'm going to run a different bottom fishing search. Let's take a look now at Bleyer's bottom feeders. I'm going to double click, run it as of that explosive day. I'm going to quick test the top 10. I'm going to test it again for 2 weeks. Look at if you held it up until 1/9 of 2019. Whew! Bottom fishing does create an incredible opportunity, folks, to make money. Let's go 2 weeks from 212 of 2016. Go back to 2016 to there was the 12th. Let's go 2 weeks out, 226. Let's go do OK. And let's do the test again. Run the test. 13%, 3 times more than what the market did, 4812. Yeah, almost 3 times more, 7 winners, 3 losers. Another bottom fishing search in an opportunity to nail a turning point. All right, let's close out of that. Let's get back into the software. Let's go back in time a little bit more. Let's go back to now 10/16 of 2014. And folks, I challenge you to go back as much as you want in the software to find these opportunities where the MTI and buy to sell ratio get to these levels. Here we go. Let's go find 10. The date I want is 10/14 of 2014. Why? I'm looking for the lowest values during this time of both the MTI and buy to sell ratio. Remember, the further it goes below the value of 0.60 and below the value of 0.20 gives you that rubber band effect. Let's take off the market timing for a second here. So 10/14 was that opportunity. Now, guess what? The market wasn't at a bottom yet. This is why we say the MTI and buy to sell ratio help you to let you know that the market is looking for a bottom. This is a key opportunity to say it's looking. Can the market still go down? Yes, it can, and it did. So if we go look at 10/16, let's go see that was the bottom right here in 10/15. This was the explosive day. As we already were prepared, knowing that the market was looking for a bottom, this is the explosive day. Let's go back to Unisearch. Let's go find 10/16 of 2014. Bring over my trusty calendar. Let's go back to 2014. Let's go to October. And let's go to the 16th. That was the explosive day. Let's run the search. This time I want to run a different search. Let's go look at bottoms up. All right, so I'm giving you a sampling of a lot of different searches incorporated in the bottom fishing folder. All right, so let's go do a quick test of the top 10. Remember, we're only going 2 weeks. This holding all the way up into 226, not so good, right? This is why I only look at 2 weeks. Bottom fishing has a place and a time. Off of a bottom, 1 to 2 weeks, okay? Let's go set this up for 2 weeks after the 16th back in 2014. 2014, we'll go to October. The 16th was the start date. 2 weeks after that was the 30th. All right, let's go click on OK. Let's run the test. All right, we doubled the market. We didn't blow the market out of the water, but wait a minute. 7 winners, 3 losers, a lot of money to be made. 1, 2, 3, 4, 5 stocks went up double digits over that time. Did we have a loser? Yes, we did. How do you stop that? You put stops in place so that you don't let a stock run away from you. But 9%, where the VectorVest composite only went up 4.7%. But wait, there's more. Let's go back in time just one more time. Let's go back to 2012. We'll go on the graphs. Let's slide my calendar over to 2012. And I'm looking for 11/19 of 2012. Look at the market going into a downturn. Looking for a bottom. Let's go here, 11/15. There's the 19th. Now, that was the explosive day. The date I'm really looking for is 11/16. As the market did find a bottom, look at the values. Now, the MTI wasn't quite below the value of 0.60, but close enough. The buy to sell ratio definitely was below its value of 0.20. Notice that, again, the further below these values, the more explosive the upturn. But this turned out to be a beautiful upturn in the market. There's your explosive day. Was on, let's go see. When was my explosive day? That was the bottom. My real explosive day was on the 19th. There we go. And actually, the bottom was on 11/16. That was the low. And there, after the bottom, there's my explosive day coming off of the bottom. Whew. Now, again, gunslingers, pull the trigger there. Let's go to the primary wave. Primary wave kicked in 1 day later. That gives me more confirmation. Let's go to the green light buyer. Gives me a little bit further more time to get in. But you know something? The slower the signal, the more confirmation and the more comfortable and confident you are in the move to be able to go up. Let's go and run a search, another bottom fishing search on the explosive day of 11/19. We'll go to the unit search tool. We'll go back to 11/19 of 2012. Man, this is good stuff. Go back to 2012, 11. There's my explosive day, 11/19. This time, let's go run jailbreak. All right, we'll run jailbreak no contras. We call that the mother of all bottom fishing searches. So I don't know. Guess jailbreak must be a woman to be the mother, right? Well, we don't know. It's semantics. Anyway, let's do a quick test of the top 10. Look at that search all the way up until 10/30 of 2014, up 159%. Good golly, Miss Molly. All right, let's go start off and put it on for a 2-week time period. All right, we'll go from 11/19 of 2012. Let's take this back to 2012. 11, the 19th. There's 2 weeks later, which would have been December 3rd. Let's click on OK. Let's now run the test for that time period. Wow, 12% as compared to the market going up 2%, and every single one of the stocks made money. Holy smokes. All right, now I got the granddaddy of all bottoms. All right, let's go to the graphs. And someone sent me an email asking me what was the lowest value that I've seen on the buy to sell ratio. I'm going to put this on a 1-year graph because I've got to go all the way back to 2008, slide my little slider down to 2008, and I'm going to go to a date of 11/20 of 2008. Let's go find 11/20 of 2008. There we go. 19th. There's the 20th. The 20th, I have the buy to sell ratio. Remember, this is the financial crisis. I had a bottom, or actually a buy to sell ratio at 0.02. Man, that's the lowest that I think that I've seen. Let's go over a couple of days. Yeah, 0.02 is the lowest that I can find on the buy to sell ratio. But now I'm going to tell you a little something that we did. I'm going to see this bottom right here? Let's click on that date. 3/6 was really close to the bottom, but we got you guys prepared. I'm going to show you in the views. Let's go to 3/6 of 2009. Let's take my calendar. Let's go back to 2009. And I'm going to go, 2009 I said, right, Glenn? Yep. Let's go to March, and let's go to the 6th. We nailed this bottom. All right, this was on a Friday's views. Let's scroll down a little bit, and Dr. DeLito wrote an essay called Itching the Rally. So we all know what was going on. The housing bubble, everything was kicking over. While the stocks have been going down since the market broke out of the wicked wedge on February 10th, I've been watching a little sideshow. I'm going to scroll down a little bit. Dr. DeLito said right here, aggressive investors and traders should play the market with the downside, but be alert to an explosive rebound. Next thing, he gave you 5 strategies that we were going to go with. One of them was jailbreak no contra ETFs. So I'm going to go back and I'm going to run on that explosive day. Let's go back to the graphs. After that, the explosive day actually happened on 310. Beautiful. And look at the upturn that happened after that. Good, Gordon Gin. But that was the explosive day after the actual bottom. Let's go to the Unisearch tool. Let's go back to 2009. Let's go to March, and let's go to the 10th. Click on OK. We're going to double click on jailbreak. That was one of the suggestions that he had. Let's go quick test the top 10. Look at what it's done all the way up to 12/3 of 2012. You want to know why we call this the grandmother of all bottom fishing searches? But let's do it again, the 2-week time period. 3/10 of 2009. Let's go back to 2009. 3/10 to 24th. That's 2 weeks. We'll click on OK. Let's run the test again. And got to go to 2009. Sorry about that. I went back not far enough. Let's go to 2009. There we go. The 10th was the 10th. Let's go to the 24th. There we go. We go to the 24th. That's 2 weeks. Click on OK. Now let's run the test. And look at that. 52%, folks, in 2 weeks. The lower the number goes on the MTI and buy to sell ratio, the bigger the rubber band effect is. And look at that. 52%. All 10 stocks were winners. So that's it in a nutshell. Now, right now, as you look through all of this stuff, I'm going to give you a slide that shows all of the turning point dates. 12/24/2018, 1/21, 10/14/14, 11/16/12, 3/6/09. These were all turning point days. You now know what to look for before you jump on board. You're looking for either an explosive day. If you are the gunslinger, go pull the trigger then. If not, wait for the primary wave to turn around. If you still need more, wait for the green light to hit in the color guard pricing column. But you know something? Nonetheless, these bottoms offer an incredible buying opportunity. So just wait and bide your time. And you now have the advantage of using the VectorVest subscriber or the VectorVest software to help you make the right decisions. Right now, now many of you can go back and say, wait a minute, Glenn, this is all hindsight. You're absolutely right, it is. But right now, you have now sight. You now know what to look for as a turning point with the tools you only have with the VectorVest software. And that, my friends, is how you nail the turning point with the VectorVest Advantage. Folks, I'd like to say thank you for joining me for this presentation this evening. If you have any question, please give our product support staff a call. They will be more than happy to assist you. But don't sleep on this opportunity. Wait for it to come to you. Do not try to catch a falling knife and try to guess at what the market is going to do. Let the market come to you. You have the tools to know what to look for before you do it. With that, folks, adios, arrivederci, ciao. Have a wonderful weekend. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.